Picture this. You're scrolling through real estate listings, jaw dropped at those astronomical prices, wondering if you'll ever afford your dream home. But what if I told you that savvy investors are quietly building massive wealth through an overlooked golden opportunity that's hiding in plain sight? Stay tuned, because this might just change everything you thought you knew about real estate investing. Before we dive into this game-changing strategy, take a moment to smash that like button, hit subscribe, and ring that notification bell. Drop a comment below sharing your experience with real estate investing. I read every single one. Now, let's unlock the secrets of manufactured home and land deals that the mainstream media isn't telling you about. Let me hit you with a mind-blowing fact. Manufactured homes can appreciate in value by up to 4% annually when paired with owned land, yet 90% of potential investors completely overlook this opportunity. Why? Because they're stuck in outdated thinking patterns that could be costing them hundreds of thousands in potential profits. The mathematics here are absolutely staggering. While traditional single-family homes in major markets require an average down payment of $80,000, you can secure a manufactured home and land package for as little as $15,000 down in many areas. That's not a typo, you heard that right, and it gets even better. Here's what the big real estate gurus aren't telling you. Manufactured homes have evolved dramatically. We're talking about modern marvels with smart home technology, energy-efficient features, and designs that would make Architectural Digest do a double take. These aren't your grandmother's mobile homes, they're sophisticated living spaces that tenants are practically fighting to rent. But wait, there's an even juicier secret that's causing real estate investors to kick themselves. Manufactured homes can be placed on land in areas where traditional construction costs would make building impossible. This means you can tap into high-demand rental markets while keeping your investment costs surprisingly low. Let's talk cash flow, because this is where things get really interesting. A typical manufactured home and land deal can generate monthly rental income of $1,200 to $2,000, while your total monthly payment might only be $600 to $800. Do the math, and you're looking at potential cash flow that would make traditional rental property investors green with envy. The appreciation potential is what's really turning heads in the investment community. When you combine land ownership with a well-maintained manufactured home in a growing market, you're not just collecting rent, you're building equity in two assets simultaneously. It's like having your cake and eating it too, but in this case, the cake is paying you monthly dividends. Here's another bombshell that's causing waves in the real estate world. Zoning laws in many areas are becoming more manufactured home friendly. This means more placement options, higher potential returns, and less competition as you get in ahead of the curve. Smart investors are already positioning themselves to capitalize on this trend. But let's address the elephant in the room: financing. Contrary to popular belief, there are numerous lenders specializing in manufactured home and land deals. They understand the value proposition and are eager to work with investors who see the bigger picture. Some are even offering terms that rival traditional mortgage rates. The demographic trends supporting this investment strategy are absolutely undeniable. With housing affordability at historic lows, more people than ever are seeking quality, affordable housing options. Manufactured homes fill this need perfectly, positioning savvy investors to capitalize on this growing demand. Consider this. While other investors chase overpriced properties in saturated markets, manufactured home and land investors are quietly building empires in underserved areas. They're providing valuable housing solutions while generating returns that would make Wall Street bankers blush. It's a win-win scenario that's hiding in plain sight. The maintenance myths around manufactured homes have been completely debunked. Modern manufacturing techniques and materials mean these homes are built to last, often requiring less maintenance than their site-built counterparts. This translates to lower operating costs and higher profit margins for investors who know what they're doing. The concept of mini-manufactured home communities is revolutionizing the real estate investment landscape in ways that traditional investors never imagined possible. Picture this. Instead of managing scattered single units across town, forward-thinking investors are creating concentrated clusters of 4 to 10 manufactured homes on strategically acquired parcels of land, transforming their investment strategy into a streamlined operation that maximizes both efficiency and returns. These innovative investors are discovering that larger parcels, typically 2 to 5 acres, can accommodate multiple units while maintaining attractive spacing and community appeal. By centralizing utilities, creating shared amenities like community gardens or gathering spaces, and implementing uniform property management systems, they're building micro-communities that tenants actually prefer over isolated rental properties. The financial mathematics of this strategy are absolutely compelling. While a single manufactured home might generate $1,200 in monthly rental income, a well-planned micro-community of 6 homes could produce $7,200 monthly from essentially the same location. The beauty lies in the shared infrastructure, with costs for things like access roads, utility connections, and basic amenities being spread across multiple revenue-generating units. Smart investors are taking this concept even further by implementing modern property management systems. Imagine centralized maintenance schedules, coordinated lawn care services, and unified waste management solutions. These efficiencies translate directly into reduced operational costs while simultaneously improving tenant satisfaction through professional, consistent service delivery. The permitting and zoning aspects of these micro-communities often prove surprisingly manageable. Many jurisdictions are actually encouraging this development model as it addresses affordable housing needs while maintaining neighborhood aesthetics. Savvy investors are finding that working with local authorities to create well-planned communities often opens doors to expedited approvals and sometimes even tax incentives. Market response to these micro-communities has been nothing short of extraordinary. Tenants appreciate the sense of community, enhanced security from having neighbors nearby, and the professional management approach. This increased desirability often translates into higher occupancy rates, better tenant retention, and the ability to command premium rental rates compared to isolated units. The scalability aspect is particularly intriguing. Once investors perfect their micro-community model in one location, replicating it becomes significantly easier. They've already developed the systems, relationships with manufacturers, and management protocols. Each new community benefits from the lessons learned and efficiencies developed in previous projects, creating a repeatable formula for success. The risk mitigation benefits cannot be overstated. With multiple units in one location, the impact of a single vacancy becomes much less significant to overall cash flow. Additionally, the ability to maintain direct oversight of all units simultaneously reduces maintenance issues and allows for rapid response to any problems that do arise. This hands-on management approach helps preserve both property values and rental income streams. Perhaps most exciting is the potential for future appreciation and exit strategies. Well-maintained micro-communities of manufactured homes present attractive acquisition targets for larger investors and property management companies. The proven cash flow, established systems, and economy of scale make these properties particularly valuable in the marketplace, often commanding premium prices when it's time to sell. The tax advantages are another aspect that has accountants doing double takes. From depreciation to improvement write-offs, manufactured home and land investors have access to numerous tax benefits that can significantly boost their after-tax returns. It's like having the IRS as your silent partner in wealth building. Risk mitigation is built into this strategy naturally. By diversifying across different locations and price points, smart investors are building resilient portfolios that can weather any market conditions. The low entry costs mean you can spread your investments across multiple properties more easily than with traditional real estate. Let's talk about leverage, because this is where things get really exciting. Many investors are using their manufactured home and land deals as stepping stones, building equity that they can tap into for future investments. It's a snowball effect that can lead to exponential portfolio growth over time. The environmental angle is another factor driving interest in manufactured homes. These properties are often more energy efficient than traditional homes, appealing to environmentally conscious tenants and potentially commanding premium rents in certain markets. Its sustainability meets profitability in the best possible way. Market timing is crucial, and right now we're seeing a perfect storm of factors making manufactured home and land deals more attractive than ever. Rising construction costs, housing shortages, and changing consumer preferences are creating opportunities for investors who are paying attention to these trends. The scalability of this investment strategy is what's really turning heads. Whether you're looking to build a small portfolio of 2 to 3 properties or aiming to create a manufactured home empire, the principles remain the same. It's all about identifying the right opportunities and executing with precision. Here's what your competition doesn't want you to know. The best deals are often found in secondary and tertiary markets where land costs are lower but rental demand remains strong. These areas offer the perfect combination of affordable entry points and strong cash flow potential. The networking opportunities in this space are incredible. As more investors discover the potential of manufactured home and land deals, communities of like-minded individuals are forming to share knowledge and opportunities. The collaboration potential is unprecedented in the real estate world.